Welcome to the Everything Financial Radio Show here on the Legacy Radio Network. We are here every week at this time. Awfully glad you decided to join me today. My name is Dennis Tubbergen, and we have a terrific show lined up for you this week. Mr. Jeffrey Tucker of Laissez-Faire Books will be stopping by. Jeffrey is a past guest here on the program. We're going to get his take on what the Federal Reserve is doing and really talk about him about how banks are no longer in the banking business. Jeffrey wrote a very interesting piece that caught my eye. I invited him back to today's program. He graciously accepted, so we'll be talking to him momentarily. Also, past guest on the program, Mr. Gerald Celente, who is a trends forecaster, talked about the fact that in his view, he agrees with Dr. Paul Craig Roberts, who's the former Assistant Treasury Secretary under Ronald Reagan, for those of you that can remember back that far. He is convinced that the bond bubble is about to burst, and 2013 is the year that it will happen. Mr. Celente also talks about the fact that when you look at gold and silver prices and look at the fact that the European Central Bank, the Bank of Japan, and the Federal Reserve are making all kinds of easy money available, and gold and silver is not going up in price. He is convinced that gold and silver prices are being manipulated. We'll hear what he has to say about that, and I'll give you my take. Also, the fiscal cliff, or as I like to call it, fiscal cliff nonsense. Are the politicians in Washington, collectively speaking, have they from the very beginning intended that we will go over the fiscal cliff? I'm going to share with you a Bloomberg article that will make you think. And Social Security, we're going to talk about that in today's last segment. It's not a political issue, it's a math issue. Did you know that Social Security right now has 56 million recipients? There are 94.75 million full-time private sector workers in the country. That means that for every 1.67 Americans who work full-time in the private sector, there's now one person collecting Social Security. That math, folks, doesn't work, or as they say in the country, that dog won't hunt. So we'll talk about all that on today's program. I want to remind you also that we have a brand new series of discovery groups that we'll be hosting around the West Michigan area beginning in 2013. You can go to personallegacyseminars.com to get a complete schedule. Also, I have a new book that will be released in January, and we have a class that will be based on that book that we will also be conducting in West Michigan beginning the end of January. All that information is available at personallegacyseminars.com. Personallegacyseminars.com is the website. Also, a quick reminder, Everything Financial Radio is now available on iTunes. You can go to the iTunes store. You can type in Everything Financial Radio, and all of our radio shows are available for free. You can simply download the ones that you would like to listen to. And again, that's at iTunes. Or if you'd like to go to everythingfinancialradio.com, all the interviews with our guest experts are listed there as well. That website, everythingfinancialradio.com. I am pleased to have back with me on the program today Mr. Jeffrey Tucker. Jeffrey is executive editor of Laissez-Faire Books. He is also a prolific author. He wrote, I believe, Bourbon for Breakfast, Living Outside the Status Quo in 2010. It's a Jetsons World, Private Miracles and Public Crimes in 2011. And his most recent book, A Beautiful Anarchy, How to Create Your Own Civilization in the Digital Age. I believe all those books are available on Amazon. And Jeffrey, thanks for coming back on the program. We always love to have you.
I'm really glad to be here, and I'm glad you invited me.
Jeffrey, you recently wrote an article that I wanted to spend some time talking about today because I think it offers perspectives that are important for our listeners. You wrote an article about really the disconnect between the Federal Reserve policy now of literally printing $85 billion of newly printed money out of thin air. It's $1 trillion a year. And them continuing this policy until unemployment drops below 6.5%. And you talk in the article about the disconnect between the policy and the stated objective. Could you expand on that, please?
Yes, and this is really something that's troubled me for a very long time. I mean, really since 2008, because you see, the Fed engaging in these what they call accommodative policies, stimulus policies. As you call it, just printing money, and yet the reality is that it hasn't done what the Fed claims that it's done, which is stimulate the economy and patch up the problem and fix things. And it's always puzzled me, why it is that Bernanke keeps doing it again and again. It's QE1, then 2, then 3, then 4, and then, on into the end of time. And the other thing that's really bugged me is this zero interest rate policy, which you just know that when a central bank comes along and fundamentally changes something as sensitive to allocation of capital as the interest rate and basically sets out to abolish it as far as the banks are concerned, that is a radical policy. It's going to have radical effects. And what precisely those are have always been a little bit mysterious to me. So I set out to kind of do some more detailed research after doing some interviews with monetary expert like Robert Murphy and Steve Hanke at Johns Hopkins University and Doug French, my colleague at Laissez-Faire Books, and set out to really examine the numbers more carefully. And what I've come up with here is really quite alarming. It shows that what Bernanke has done is changed fundamentally the nature of banking in this country and the scope and reach of the Federal Reserve itself. And I don't think that this is widely understood.
Jeffrey, it's clear that, as you indicated, the Fed is engaged in this policy now through QE4, and it certainly is not helping the economy, certainly not helping employment significantly. So when you say that the Fed has really changed the way banking works, talk about what those fundamental changes are. Well, let's just start with that. What you do a great job in the article explaining how the banking system has changed. So maybe you could expand on that for our listeners.
Okay. Well, in the first place, you're exactly right that it hasn't done anything about unemployment, and I just had to laugh watching Bernanke's I perversely like to watch his press conferences. Like I can't miss them for some reason. I get so interested in them. So he's up there talking about how he's going to keep rates low and keep this accommodation going in order to stimulate employment, which is just on the face of it stupid. I mean, there's no unemployed person that sits around thinking, I wish I had a job. If only the Federal Reserve would start buying more mortgage-backed securities, then everything would be okay.
I think he practices these. He must practice what he's going to say in front of a mirror so he can keep a straight face.
Oh, I think so, yeah. And, the press just goes for it. It's like, oh, Bernanke, wow, he really does care about the unemployed. Well, look, the policies have not actually worked to give anybody a job, and they won't do it. So, in the first place, I offer 3 charts in the article. And the first concerns the astounding effect that zero interest rate policies have had on commercial lending and residential lending. Essentially, what you begin to see is that banks have, relative to historical standards, gotten out of the business of lending. And this just anecdotally. If you own a business and you want to buy another business and you go down to your local bank and say, I want you to help fund this merger, they're going to laugh at you and say, that ain't going to happen. Mortgage credit is more and more difficult to get. We're seeing a dramatic outsourcing of the lending function of banking out of the banks themselves and over to a kind of a private sector model. The non-banks are picking up ever more of the slack. Even in my own hometown, we probably have 15 different private lending agencies, and I can tell you they ain't following, zero interest rate policies, right? Any more than your credit card company with a revolving debt is following zero interest rate policies. These are market interest rate policies. So you're seeing the loan markets gravitate out of the banks and into the non-bank sector, and this is largely caused by the zero interest rate policies themselves. What people forget is that zero interest rate is not just about stimulating you and me to borrow money. It has an effect on the supply side too. Banks can't make a reliable return anymore as long as they're following the Federal Reserve's policy. So it's not profitable for them to be in the lending business. I mean, they've taken away, the zero interest rate policies have taken away from the banking industry what has always been its historic function. So and so the question is, well, what are they doing instead of lending? And what they're doing is pursuing complex financial derivatives markets operations and things, and also relying on what is a constant stream of interest payments from the Fed. The Fed pays the banks to keep their banks' deposits with the Fed. That's managed to kind of recapitalize the banks. Now, when I say recapitalize, I don't mean really recapitalize. What it's done is it's phonied up their balance sheets, gotten rid of the bad debt that's on their books that's mispriced, and allowed them to offload it onto the Fed. The Fed purchases the bad debt, puts the money that they're paying the banks into the Federal Reserve itself, marked as capital for that bank, thereby repairing the balance sheets of the banks and taking them out of, at least on technical terms, out of bankruptcy. So that's his way of saving the banking industry. The exchange is for the banks to get out of the lending industry and rely on this constant stream of revenue that the Federal Reserve is providing them. So that's really the very first step of this process.
Well, we are chatting with Mr. Jeffrey Tucker. We're pleased to have him back on the program. We will continue our conversation with him when Everything Financial Radio returns here on the Legacy Radio Network. Stay with us.